Welcome back to the channel. I'm Michael Studebaker, and today we'll be talking about how you can start on real estate investing and just the different types of real estate investing there are. If you haven't already, please subscribe, like the video, hit the notification bell if you want to see more content on personal finance. Now, let's get straight into the video. So, the real question is, can you make good money as a real estate investor? Real estate is risky, but if you know the market, it can pay off. So when most people think about real estate investing, they likely think of a few things. They think of mostly just rich people or just rich billionaires owning cities, but the average investor should also seriously consider investing in real estate. If you have no idea where to start, don't worry, you're not alone. There are many ways to get started as a real estate investor. Some of them require as little as $500. I'll be breaking down the different types of real estate investments and who they're best for. But let's get started by talking about what really is real estate investing. And put simply, real estate investing is the purchase or sale of a land and buildings to earn money. There are a few different categories of real estate. So first one is residential real estate. This includes houses, apartments, buildings, vacation properties, and anywhere else people live. This is the easiest area of real estate for a beginning investor to enter. Then there's commercial real estate, or CRE. This involves office space, retail storefronts, or any buildings used for business purposes. It's more expensive than residential real estate, and you'll manage more property. The best way for individual investors to get into CREs is to buy shares in a real estate investment trust, which I'll be talking about in the video. So there's also industrial real estate. This includes warehouses, storage units, other large special purpose structures like car washes that generate sales. So how do you invest in real estate? Before you pick your first investment, you should decide how much you'll want to spend on a down payment. So real estate estates can be a risky business, so don't invest any money you can't afford to lose. Commercial property investors, for instance, should have around $50,000 ready to go. If you don't have anywhere near that much, or there are less pricey ways to invest, definitely. Real estate can also be a significant investment of time. Fixing up a property isn't easy, and even basic maintenance is a regular task. You'll have to keep up with some real estate investors outsource maintenance to management companies at an extra cost. It's a good idea to talk to a qualified attorney before making your first purchase. So holding investments through limited liability companies is a lot less risky than making an investment in your own name. If the investment fails, you want your assets protected, and you don't want legal liability if you can avoid it. Now that the disclaimers are out of the way, let's look at your options. So, purchase a rental property. So the resident real estate investor with time to commit can buy a property and become a landlord. This is a guaranteed monthly income as long as you can find tenants. And it's one of the most common ways to make consistent money in real estate. You can buy and rent out a commercial or industrial property too, but the upfront cost is going to be much higher and the management is going to be more complex. Residential properties may technically be passive investments, but they require pretty active involvement. So make sure you've got the time as well as the money. Many landlords outsource building maintenance to management companies. Other handles repairs themselves. So how are you going to purchase a rental property? First, get to know your local real estate market. The better you know the neighborhood, the more likely you are to make a smart purchase and offer tenants a price that's fair for them and competitive for you. learn what kinds of tenants live in the area, who's moving there, and how prices have changed over time. A site you can go to find rental properties, which my parents used to find their primary residence, was realtor.com. It is very user friendly. It has all the information you guys need to consider about the neighborhood and the market in that area. There's also another company you can go through, which is Roofstock, the leading marketplace in a single family rental units. They make browsing for homes ridiculously easy. You can look through their catalog of homes and click on ones you like. You'll be given just important details like current rent, how highly the neighborhood is rated, and just more. The best part of Roofstock is that they sell homes that already have tenants in them. That means you'll have an income stream as soon as you purchase a rental home, which is perfect. Next one is REITs. So investing in a REIT isn't that different from investing in a stock. As an investor, you give money to a trust or corporation which purchases a property. You'll get a portion of the dividends as the property appreciates. So REITs are bought and sold on major stock exchanges. This is the easiest way for a beginning investor to get into the commercial real estate world. It comes with a potentially high yield. Corporations pay out at least 90% of their incomes on the property as dividends to investors. Plus, your investment is liquid and you can sell your shares and cash out without having to deal with selling the building. And the corporation does all the management work for you. Most likely, you'll be dealing with in publicly traded REITs. So accredited investors with a high net worth may be able to access private REITs. These trusts aren't registered with the SEC, and the upfront investment required is much higher. So how do you invest in REITs? REITs can be part of a beginner investment portfolio. A publicly traded REIT only requires a few $100s, and you can sell it at any time. You'll want an equity REIT, the most common kind, as opposed to a mortgage REIT, which is a more complex trust that deals in mortgages. If you want to wade into the real estate market without committing to property management, this is a good place to start. So, to buy shares, you'll need to go through a brokerage firm, just as you would be buying a stock. So, that's basically it. So there's crowdfunding platforms, an increasingly popular option for small-time real estate investors. Crowdfunding platforms are passive investments similar to REITs, but instead of going through a trust or corporation, investors basically pool their assets and match with invested real estate developers or sponsors. They're platforms for commercial and residential real estate. Since these investments are illiquid, you can't sell them easily, and depend on the variables of the real estate market. They can be riskier than REITs for sure, but they can also get you dividends on properties you wouldn't be able to access as an individual. You might have to wait longer for returns, but the returns tend to be pretty high. So how do you invest in crowdfunding platforms? Many established platforms like Equity Multiple are only available to accredited investors, those with an income over $200,000 or a net worth of $1 million. But real estate investing is no longer limited to those who meet that criteria. So crowdfunding opens opportunities to any interested investor now. If you want to get into real estate investment market, there are plenty of options. One of those options is Diversified Fund. It's an alternative investment platform with zero management fees and a commitment to helping their users achieve financial freedom, which is what we're here for. Diversified Fund creates investment funds of private market assets like real estate that are designed for the everyday investor. There are no net worth restrictions and the minimum investment starts at just $500, making this accessible option for investors of all income levels. Another option is Straightwise, which lets you get started with as little as $1,000. Straightwise removes the middleman, brokers charging pricey fees, and lets you invest directly in their selection of expertly vetted properties. The company founders have more than 4 decades in the industry, so you'll know your investments are in good hands. If you want to keep your initial investment low, Fundrise is also a great option. I've used it before personally. You can build a starter portfolio for only $500, then upgrade to a core plan once you've spent $1,000. Fundrise's investment strategy is based on real estate investment trusts, which is REITs, which are bundled investments in commercial properties. So note that dividends on crowd-funded properties aren't always quick. Both companies highly recommend that investors commit to the long haul, which is usually around 5 years. Investments are inherently risky, while long-term investments balance out your risk, just like with stocks as well. So next one, we have short-term vacation rentals. So what if you want to go through the stock market or buy a property, but you still like to generate some real estate income? Try renting out a room on a nightly or weekly basis. You can even rent out an entire home for short-term periods. The amount you'll earn will vary depending on the local rental market. If you live in an area with high tourist traffic, whether the traffic is seasonal or year-round, could really turn a profit. You don't need a ton of cash to get started, just the extra space. And you'll start seeing cash flow pretty quickly compared to a stock investment, which would take a long time. Think of these rentals as a side hustle or a part-time gig. You're responsible for furnishing and maintaining the property, and just bringing it up to code, as well as communicating with renters. How to get started with this? Really, there's lots of renters. They find it easier to go through a third-party website. Main one is Airbnb. That's the most well-known. There's also VRBO, or Vacation Rentals by Owner. The website does lots of management for you, like finding and screening tenant matches, providing some form of damage protection, and helping handle renter complaints. If you'd rather handle each aspect of the process yourself, you can advertise locally through websites like Craigslist or go through a network of trusted friends. Don't forget to check your local laws to see the regulations you need to meet. Many cities and states are cracking down on the short-term rental market in response to rising housing costs. So laws may limit the amount of time guests can stay, for instance. Next one is trading or flipping real estate. So after you've been in the real estate investment game for a while, you get to know what you're doing. So for investors ambitious enough to embark on construction projects, trading or flipping real estate can bring in big returns in just a few months. Here's how it works. An investor basically buys a undervalued property, renovates it, then sells it at a higher price. It's possible to be a pure property flipper who leaves their purchase unrenovated and waits for the market to improve. Property should already be in good condition for this to work. Selling isn't guaranteed, of course, and you're still on the hook for the mortgage if you can't get tenants or buyers. So house flipping is best for seasoned real estate investors who really know how to hedge their bets with the local market. So how do you trade or flip real estate? So first, you definitely got to get familiar with the construction and design basics and local building codes. If you aren't doing the work yourself, you'll be managing the process as the owner. Then get busy estimating renovation timeline, pricing materials, etc. It's an active investment. Professionals suggest working with a partner, ideally someone with a skill set you don't have and need. Be aware this type of investment comes with a pretty big risk. You can make lots of money in a short amount of time, but you might lose money if the market doesn't go your way or if you can't find tenants. And that's about it I really have for now on investing in real estate and the various ways you can get into it if you diversify your investments and expand your income streams. So I hope you guys enjoyed the video and found it helpful. If you did, please subscribe, like the video, and hit the notification bell if you want to see more on personal finance. I also hope this helps you guys decide if you want to go into real estate and which path you should take. Don't be afraid to try something out and fail, because you'll definitely learn from it and grow. I wish you guys much success. Remember, consistency is key and hard work pays off. Thanks guys. I'm Michael, and I'll see you guys in the next video.